Tesla's Q2 2024 earnings are out, and they are interesting. There are a few surprises in there and some good news and maybe some bad news, but we're going to get into all that and have a quick chat about what is missing. I'm Brian. Welcome to Future Ozza. Yeah, I got Herbert with me, as I do, while I'm on the road. He's gracious enough to remain in studio and keep the news desk manned. I thank you for that, Herbert.
Absolutely. You're important to me. I appreciate you, dude. Thank you.
So what we're looking at here is this income statement. Nice. I assume you have seen this. This is a Sankey diagram, which is a really clever and I think pretty good way to show what's going on. So auto sales, the bulk of it, some leasing revenue, 0.9 billion in regulatory credits. Walk me through some of what we're looking at here.
Yeah.
And what's important.
Well, I mean, obviously the bulk is still auto. It has fallen year over year, but at least Tesla did announce in Q2, in the Q2 earnings call, that it's stabilized and they're expecting it to grow again. So the decline happened because, of course, the economy. That's what Elon is saying. And but they're back out. And then they did make a very big point that if you look at Tesla as an auto company and you think that Tesla fell by 9%, I don't know, you should take a look at all the other competitors. They got hit harder. They have a lot of levers to use to keep the sales up. And then they've been working on that. It seems to have been working as well. So that's number one. Regulatory credits is massive. Wasn't it you that just gave me the term that said the amount of regulatory credits that Tesla continues to get is equivalent to, what is it, 9 billion or something that is
9 billion over time,
which is like enough to pay for all factories. I love it.
All the automotive factories combined cost about that much. Free factories.
Factories. Energy, of course, is the big surprise. It's massive. And it's going to only continue to grow. They've said that their backlog is just unbelievable. So you got your regulatory credits, you got your energy storage. The services, by the way, I don't know if the services, I think it's anything that's non-car revenue. It's growing. And at some point, people are saying, hey, that non-car revenue is going to be really, really high. The reason why the earnings per share was lower was because of higher auto gross cost, lower auto gross margin, higher cost. And Jeff Lutz is explaining that one of the reasons why that is because of the Cybertruck. So surprisingly, the Cybertruck is a brand new vehicle. They're still losing money on them. And I was shocked that even the foundation model, they're losing money on it. And so paradoxically, the higher the sales, which you're starting to see every quarter, every month, it's causing them to have a higher cost. And once they get this turned around, though, because of course, higher sales means you're able to scale, you'll get this past, we'll be past this. But that's one of the reasons why the cost of goods is higher than usual. Yep.
Now, I should clarify on that. I think I'm confident that the per unit cost on the Cybertruck is positive, but they have just begun depreciating and amortizing all that equipment, billions of dollars of equipment. Yeah. And because the unit count is so low, that little bit of profit on a per unit basis, while helpful, doesn't make a meaningful dent in the sheer amount of money that we're accounting for here. Yeah. Services, that would include supercharging, wouldn't it?
I would assume anything that's non-auto.
Yeah. I would assume that is the case. So scrolling to the side a little bit here, that gives us total revenue, 25.5 billion. Look at their
restructuring
under cost.
Yeah. The restructuring thing was pretty significant. I saw somebody, can't remember who it was it AJ, who said that if you look at the earnings per share, the miss of we got to 15 cents is because instead of 16 cents or something like that, is because of the restructuring, the one-time restructuring cost. If you take that out, it would have been a beat. So
yeah. So that's interesting to watch. If you look here under auto costs, 16.2 billion, it's down 6%. Even though we're selling some very expensive Cybertrucks with very high costs. I think that's interesting. Yep. Energy costs up 85% against increase in revenue of 100%.
Exactly. They're out there
what we
building.
love to see.
Yep. And then Larry Goldberg has pointed out that you can actually, if you book a revenue for an energy sale today, you can have a third more that's going to come later. That's so the energy costs only come to the implementation, but there's other, as you realize it, as you move along, you're going to get more higher margin impact.
Yeah. Now let's look at this R&D figure, 1.18 billion. Boy, that seems lean.
For a quarter, that's smaller than I was hoping for. I want to see them spend lots of more money, but hey, they're building these. As long as they continue to shoot for the stars and say that they, the south end of Giga Texas is coming online, and they are building the largest supercomputers in the world. I'm okay with that.
Yes, I would also like that number to be high, but I don't want it to be wasted. You can increase your R&D by just throwing money down the drain. You can determine how warm it gets when you set cash on fire. That's research, but it's not really development. So maybe don't quite do that one.
Yeah.
Are there any surprises or things to look for in here that we're not noticing?
Well, there was obviously the analysis now coming out, and I'm watching and listening to the experts out there. I don't think it was that surprising, honestly. It's the difference between why the stock has fallen is because of people who have a 3 month who are realizing that the 3 months in the next 3 months there's not going to be any more news. That's the reason why it fell. The auto gross margin was a miss. And that's what people are focused on. And so there's a knee-jerk reaction immediately on that. But if you, like we just did now, dive a little deeper, it's all explainable. And to me, why didn't they latch on to the fact that they said that Q2 and the rest of the year, the volumes of sales is stabilized, right? It's no longer falling. And number two, they did say that they're going to grow production capacity by 50% next year. So 50%. This is no longer, and Tesla, they're not going to do production capacity if they don't sell those cars. And so,
well, and but Herbert, next year that we're talking 6 quarters away to realize these benefits.
Yeah.
I need to call my JG Wentworth because I need cash now.
Yeah.
If interestingly in the top here in the middle, you'll see interest at $1/3 billion. Yeah. I'd like to get $1/3 billion in profit out of my company that I'm invested in. Well, guess what? It just happens. It just falls into their lap, which is
did we talk about the ridiculous. $30 billion in cash?
Well, let's talk about that. There is now 31 billion, is it? Mm-hmm. It's a little pile of cash with which they can do what they need to do. Obviously, R&D, very lean operation. The results are pretty breathtaking. They can expand into more markets. That's capital intensive, but worth it. They can, I don't know, buy something.
I want to reframe this conversation though, right? Because we've just spent a lot of time looking at the financials and looking at the actual thing.
Yes.
And that's actually, that's good. It's important that we do that, but it's a mistake, right? To focus on that. Even Elon himself at the earnings call said, right? If you're worried about auto business and you're worried about these little things that are happening right now, it's the wrong game. Don't invest in Tesla if that's what you're focused on. We are about Robotaxi. And the things that they said yesterday, I'm going to go through some of them big announcements I heard that I'm very excited about, right? So number one, He talked about Robotaxi is now going to happen in 10/10 instead of 8/8. To me, that's great because if it was January or longer, I would have been very worried or a little bit more concerned. But 10/10 is just 2 months delay, means everything's still on track. He then said when he was asked, when can you expect the first Robotaxi ride? He said, well, it's basically when we think we can do unsupervised FSD. He thinks unsupervised by the end of this year, and shocked if not next year. So again, he's not changing his tune about when he expects we're going to Robotaxi.
That's true. He has been saying that for years.
Oh, Brian. But I would say, okay, yes, that's all true. But we ourselves are seeing this now ourselves. Many of us who have seen the miles per intervention can increase. The Cyber Robotaxi, he said, is going to be produced here at Giga Texas, and the Optimus end of next year. So to me, when he said that as one sentence, that sounds like he's saying that Cyber Robotaxi is going to be building Robotaxi in Giga Texas next year. Tesla's in talks with a few major OEMs interested in licensing FSD. Last quarter, he only said one. Now it's a few. And then he said it's got to be 1 million cars per year, not just 10,000. So these major OEMs are major. And he goes, I suspect more over time. He then said that that we will see, he expects to see regulatory approval for unsupervised FSD in China, Europe, and the rest of the world by the end of this year. So again, and then he said that FSD by itself will be a demand driver, a massive demand driver. So people are realizing that you're comparing this to competitors, but no competitor has the FSD that Tesla does. And so that's going to grow sales. He explained that Tesla Network is you can summon a car, and that 7 million cars will automatically just have this. And so he kind of said that this is instant scale with a software update. And he explained a little bit how that works.
And for people who are paying attention, for people who are not looking at the 1 week horizon, or even the 3 month horizon, or even the 2 quarter horizon, all of this makes sense. I tried to explain to people that there was a gentleman on X who posted saying that he bought in around $12 a share or something. And this poor, lonely, sad Tesla Q came along and said, boy, you're just a real sucker and all that. You should just sell out of it and be done. And I point out that this investor saw something in 2018, 2019 that the other people didn't, that even Wall Street didn't. And some of us still see that today. I don't like everything the company's doing. I don't like all the directions. I have a lot of questions that don't have good answers. But what I don't have is a faith in any other company to execute on this level, at this scale, on these things at this time.
Innovation, execution, So do you think NVIDIA is a good investment? Well, it happens to be the hottest investment today because of compute. So then did you ignore when Elon said that we're nearing completion of the South End Giga Texas? It's going to have 80,000 H100s, 100,000 hardware 4, which he calls AI 5s. That's Tesla's own chip there. Then he's going to double down. He said, we will double down on Dojo. And he talked about how, NVIDIA is obviously it's their job to increase the prices of their chips. It's very competitive. People want it. How does Tesla ensure? We're going to double down on our own Dojo. Then he said that we see a path that we can be competitive to NVIDIA. We have no choice. Demand is so high. So it's like, whoa, you got a company here that is now saying doubling down in Dojo. The last quarters, he was saying, I don't know if Dojo will work or not. Not sure yet if we're going to commit to it. Now we're saying we're doubling down on it. So, okay, we've got something here that's going to be competitive to NVIDIA. Okay?
Okay. And it's crazy. It's crazy. If you told me that, if you told me that in 10 years, any of the other U.S. auto companies are going to be competitive in designing and processing AI, I would tell you that is unlikely, Herbert. But here we are. And this is what it's taken, is 10 years of 12 years really of chip, of in-house design. So guys, in the comments, what did we miss? What did we misunderstand? These financials, they're very interesting, but surely we missed something. What are you excited about? What are you concerned about? We'd love to know. Do me a favor, head over to Brighter, get a little brighter with Herbert. He does great work over on his channel and also on X. Everybody else, like, subscribe, stay tuned, stay juicy, all that good stuff. And I cannot wait to hear from you clever robots in San Luis Obispo this weekend, perhaps.
Thank you, Brian.